50, that means that sector of the economy is expanding. Below 50, it's contracting. And we've actually seen, again, it is still in positive numbers, even though it declined a little bit in January relative to December. GDP, as I mentioned, is a number that we're actually looking at in Q4, came out at 4%. What I think is interesting, again, is looking at those historic numbers we saw in the second and third quarter of 2020, but looking out kind of where we see growth continue to project. We've actually seen an increase in the Bloomberg consensus estimate for the GDP forecast for 2021 has increased over the past week or so from 4.1 to about 4.8%. I know references in here about 4.1%. From coming off of that decline of minus 3.5% in 2020. But because we're starting to see some positive numbers around the vaccines, as well as the continued fiscal support, there is that expectation that we could start to approach a 5% for GDP in 2021 with about 3.3% for Q1. And the Fed, as I mentioned before, are still maintaining their accommodative policy. As you can see, they've kept that dropped the federal funds rate back in March of last year to that 0 to 0.2.5 range. They have not given any indication that they're going to come off that range anytime soon, that low bound. They're giving us the expectation they're going to keep interest rates at that zero bound level until 2023. But one of the areas where we look at to give us any indication if the Fed is going to start tightening policy a bit is going to be on their balance sheet and their monthly purchases that they add to their balance sheet. Currently, the Fed is purchasing about $120 billion per month onto their balance sheet. As you can see, it kind of approaches that $7.5 trillion level. And what we're looking for is any indication that they could start lowering those monthly purchases on the balance sheet. Okay, they have given us indications that forward guidance is going to be one of the tools in their toolkit, and they're going to be very transparent about that process. So it's one of the things we're looking out for, especially in this low rate environment, because that could definitely be an indication of continue to sustain growth, as well as where we could start to see interest rates start to increase a little bit. And with the recent positive news that we've seen from, again, expectations for additional stimulus, expectations for growth in the second half of 2020, we have started to see the yield curve start to steepen a lot more than what we saw possibly when we met back in November. So the yield curve, what we see here is you can compare that chart right there on the right-hand side where we see October in dotted gray compared to that magenta dots for January 2021. And what we're starting to see is that the yield curve is starting to increase a little bit on the longer end of the curve. So we're expecting the short end of the curve, in a sense 2 years and under, to be contained and constrained by the Fed. But that longer end of the curve, we're starting to see an increase in yields where even this week, actually today, the 10-year Treasury went above 1.3%. I actually took a look to compare from the last time we met to where interest rates were today. And when we met back in November, the 2-year note was at 0.17, the 5-year was at 0.39, and the 10-year was at 0.87. But today, the 2-year was at 0.10, so it was actually down 7 basis points. But the 5-year was up 15 basis points, and the 10-year was up 40 basis points from the last time we met. What we're starting to see is that the yield curve, the longer to the yield curve, we're starting to see interest rates increase from that. We're starting to see an increased steepening due to expectations of, one, inflation coming in the second half of 2021, and secondarily, that expectation for growth. And retail sales was so that number that came out today definitely helped support that. So before I get into the city's portfolio, are there any questions about the economy or anything that I covered or didn't cover that you'd like to address?
Any guess on how they'll let the yield curve go in terms of spread?
In terms of like the spread before the 2 and 10?
Even okay, 2 and 10.
Yeah, I mean, we're still at historic levels right now. I don't see, one of the things that the Fed has actually talked about is doing some yield curve constraint, possibly in around the 3 or 4 or 5-year mark. We don't expect that. I think what the expectation would be is that we'll still see a continuing steepening of the yield curve. Once we start to hit some certain metrics, if the 10-year hits 1.5, we might see that pull back a little bit. But I would expect that we do not think that the Fed is going to stay at that zero bound range until 2023. We think that with inflation expectations in the second half of 2021, that they might bring that out about sooner, possibly the second half of 2022. But right now, we don't expect the Fed to do any sort of movements. And we still think that that spread between that 2 and 10 years actually could continue at historic levels right now, especially with the fact that the 2-year has actually dropped since the last time we met. And we've seen a little bit of dropping in that. But that steepness that we're starting to see isn't around that 5-year mark. And so I think seeing the fact that even the 30-year went above 2, I think it's a positive. Everyone's looking for higher interest rates. I think it's going to be a positive for the market, but we don't expect the Fed to come in and take any sort of action, especially in the near term.
Thank you.
I have a question, Christopher.
Sure.
With the current rate of vaccination, when do you see the economy starting to open up more freely and accelerate? About when do you think that'll happen? Will it be in the summer? And what are the longer term projections over the next couple of years for the recovery of the economy?
So I think so twofold. I think that's a good question. We're projecting that we'll start to see some more normalcy, and especially if the administration's plan for the distribution of the vaccine stays as it is right now, that possibly into the summer, the second half of the summer, we can start getting back to the more of that normalcy. And by normalcy, meaning transportation, traveling, kind of getting back to that more interactions. You know, personally, I kind of view it as when can I go to a Padres game? Is kind of how I look at it. And we're kind of seeing that expectation possibly in and around midsummer, mid to end summer, where we're at right now. So that's kind of where we're looking at. And that's going to, again, I think help put the economy continue in this path of continued trajectory. Getting back to recovery mode from where we were pre-pandemic, I think there's going to be multiple areas of the economy that are going to start getting back to that levels. But the one that is definitely going to lag is employment and the employment numbers. We're not expecting the employment numbers possibly to start getting back to pre-pandemic levels, possibly till the end of 2023, 2024, just with the environment that we've come into. And because of the fact that a lot of the jobs that were lost were those low wage earning jobs. And when you think about it, from restaurants, from hospitality, from hotels, that they're not going to go back and hire the same amount of staff, since they'll be able to figure out how to work with 50 to 75% of staff compared to what they were at pre-pandemic. So that's going to be a challenge, especially for the employment numbers. And I think we have a longer term challenge that employment is definitely going to lag many other areas of the economy to get back to pre-pandemic levels. Any other questions? Perfect. So I'll move forward with reviewing the city's portfolio. So first, for the objectives of the city, we have a priority of safety, preservation of capital, providing sufficient liquidity for cash needs, and getting a commensurate rate of return. Our performance objective is based off of a 1 to 3 year benchmark. And the strategy is to achieve these objectives to be high quality fixed income securities, consistent with the investment policy and California government code. On page 17, the compliance, I think this is the most important page in the entire presentation, showing that the portfolio is in compliance with the city's investment policy, as well as in line with California government code. As we look at the city's portfolio, what I'm going to do is look at that middle base of 1231 numbers. What we can see is the average maturity for the portfolio is at 2.03 years with a modified duration of 1.84. We have a purchase yield of 1.3 and an average credit quality of AA with a total market value of $15,516,423. A couple things I'd like to point out here. I know trades that were made during the quarter, in the fourth quarter, were to bring the portfolio back in alignment. You can see the duration back in September is 1.8, and with the benchmark of 1.83. We want to be duration neutral right now in this environment. With interest rates where they are. And secondarily, when you compare the purchase yield to the average market yield, if we went out today and purchased all the positions in the city's portfolio, the yield that we would get today, or I'm sorry, as of 12/31 for this report, would be around 23 basis points. Okay, so we have some good gains that are built up in the portfolio with that purchase yield of being 1.3%.
Christopher?
Yes.
On that slide, how did the balance sheet go from about 12.5 million in September to 15.5 million at the end of the year. In 3 months, it went up $3 million. How did that happen?
And if staff could help me, I believe there was a deposit of $4 million that was placed into the portfolio in the fourth quarter.
Yes, we can answer that. So when it comes to the inflows to the city from our general tax revenues, the majority of our inflow comes from property taxes. And if you own property, you know that your property tax bills are due in November and April each year. And so there's a huge, we sort of have a little bit of a dry spell from July through mid to late November in terms of inflows into the city. And then we get huge distributions of property tax starting in November and December. So the reason why we had that increase is because we had a huge influx of revenue. And of course, we moved some of it into the portfolio for investment.
Okay, and then, so to follow up, that money that was deposited into the portfolio, I assume went into buying bonds, but the current yields are very low. Were you forced to buy bonds at a very low yield?
Yes, unfortunately, and I can go through that. We can actually jump, if you'd like, right now to the transaction page. I was going to touch on that a little bit later.
I'll let you go, at your pace, and
Okay.
I was jumping ahead. But thank you for answering my question.
But yeah, so we did go through those transactions, and I'll review the transactions that we went through during that quarter. And a lot of that you'll see in the duration distribution. And one thing to keep in mind, for fixed income portfolios, the biggest driver and impact of total return is actually the duration of your portfolio. And duration is a measurement that measures the risk that the portfolio has to interest rate movements. Okay? Interest rates go up, the value of your fixed income portfolio go down. If interest rates go down, the value of your fixed income portfolio goes up, that percentage relative to duration. So I'll talk about that, but that's why we're managing the portfolio specifically around maintaining that duration relative to the benchmark that's been established for the city's portfolio. And with that in mind, you can take a look at the sector distribution. One of the things you'll notice here in that time period between September and December is a difference in increase in our agency allocation stayed fairly similar, but the increase in the Treasury allocation. So what we saw is that during this time period, especially in the fourth quarter of 2020, the spread levels for some of these other products, asset-backed securities, CMOs, or even corporate bonds, were very expensive, okay, and were not at attractive levels comparatively to what we could get for a comparable Treasury. So even in this environment, especially in the fourth quarter, levels were very, very tight, and that it wasn't a benefit to actually make purchases in some of these other asset classes for those additional assets, and thus you'll see that we made some purchases in Treasuries for the city, as well as the additional asset of a supranational security, which is permitted by California Government Code, as well as with the investment policy for the city. So here you can see these are the issuers that the city owns, with the majority of those in U.S. Treasury or agency debt that's backed by or with the implicit backing of the United States government, as well as that new position in there, the supranational position, which represents 1%, the fourth one from the bottom, which is the International Bank Recon and Development. It is a highly, highly rated supranational position that is approved by California Government Code and actually is rated higher than U.S. government debt.
Christopher, and I don't want to take a lot of your time. I'm pretty familiar with debt instruments, but supranational was a new one on me. Can you give me 30 seconds on describing what they are, who issues them?
Sure. It's debt issued by a multi-government organization that has the support of multi-governments around the world for the express projects for development of areas. So like in Haiti after earthquakes, or water development centers in Africa. So the debt that's issued by that is actually supported by the US, Canada, Great Britain, Japan, multi-government organizations. And so therefore, due to that fact, that debt is actually rated higher than US government debt at that AAA rating.
And what is California's limit on how much we can own?
The limit is 30% of the portfolio.
You're kidding. Okay.
Generally we keep because there's not a lot of issuance of it. It's something that when we see an opportunity for it, we will purchase it. we generally participate in new issuance of supranational debt. And usually I see about a 5% allocation to any city's portfolio with supranational. I don't really see it that gets very high. It generally stays very low. But per code, it is allowable up to 30%.
Wow. Is there any default rate history on that?
A very, very small default rate, especially for these three. So that there are three that are actually only approved by California government code. There are others that are due issue supranational debt that are not approved by government code because they do not meet the ratings criteria.
You said it's higher than the Treasury rating?
Yes, because the S&P rates, so actually here, I'll jump ahead right here. So you can see here with the majority of the city's portfolio, this is the quality, is in AA. That's because the S&P 500 actually rates the US government debt at AA. Moody's and Fitch rated it as AAA, but S&P dropped it down back in 2011 to AA. Okay. So, but it's a very small allocation we usually apply for supranationals.
Thank you.
Yep. And as you can see here, the quality distribution for the city's portfolio with 11% in AAA, we've got that 62% in AA, and that 8%, 9% is not rated, is generally the asset-backed securities that are not rated by S&P but are rated by Moody's and or Fitch. And the duration distribution here, as you can see, I'll focus on the green. So you can see with inside the portfolio that as of December 31st, you can see where we are relative to our exposure for the different maturities. And I'd like to point out that we do have that exposure in that 4 to 5 year mark. As we've seen the yield curve starting to steepen, what we've been able to do is take advantage of new purchases in and around that 4 to 5 year mark. And that's something that we'll continue to do, maintaining that duration, maintaining the portfolio in line with a 1 to 3 year benchmark, but being able to take advantage of some of the opportunities of increased yields on the longer end of the curve. And here you can see the return for the city's portfolio for the past 3 months ending 12/31 at 0.25%, comparatively to the benchmark that came in at 0.05%. On a 12-month basis, it was 3.19%, comparatively to the benchmark at 3.09. And then since inception, 3.63, comparatively to the benchmark at 3.60%. And then you can see here, this is the for the portfolio characteristics, I believe for the LAIF portfolio, where we see just under 20 million in that, showing a yield of 50 basis points because it's a combination of one of the other local government pools. One thing to note, what we're seeing in this low rate environment is that the yield on LAIF is continuing to drop. Right now, as of this morning, it's at 41 basis points, and we expect the yield on LAIF to continue to approach that 20 basis point level within the next couple months. So it is something, especially for some of the city's portfolios, looking at that and just being aware that LAIF is going to start coming more in line with where yields are on the short end of the yield curve. And as you can see here, the breakdown between LAIF and the local government investment pool. And then the consolidated information for the city's portfolio with the average maturity taken into consideration, the LAIF and the local government investment pool, maturity of 0.89 years with a duration of 0.80, average purchase yield of 0.85%, and market yield of 0.38%, average credit quality AA+, and total market value of $35,505,440. And then finally, the consolidated breakdown of the sector distribution. As you can see, more than 50% of the assets are in LAIF, and we can see that Treasury allocation of just over 11%, asset backs just under 3%, agencies around 17.5%, and corporates at 8.8%. And what we can see here is the portfolio holdings. We can break these down. As you can see here, first I'll note, I mentioned the asset-backed securities. You can see some of them AAA rated, but not rated by all three. So that's where that not rated category comes into play, as well as with regards, we can see here's the supranational position, rated AAA by all three major rating agencies. And then finally, what I would like to address is the questions that were made from the purchases that we made in the portfolio during the quarter. So as you can see here, what we purchased is treasury notes, some asset-backed securities with Toyota, as well as some agency debt built into the strategy. But what I'd like to point out is some of the areas that we purchased those along the yield curve around that 25-year mark. So in a sense, going out purchasing 4 and 5-year paper to help with that diversification along the maturity distribution, especially with the fact of this environment that we're in right now. What we're seeing is yields are starting to increase with that steepness of the yield curve and trying to be able to take advantage of that. But as you can see too, some of those yields, 50 basis points for that Fannie Mae note, 3.7%, and then some of the treasuries, as we can see for the yields. So the yields that we actually received on some of those, very low levels. We are at our historic levels right now, but we are very tactical about executing on capital, making sure, especially if we're going into some products, like asset backs, CMOs, or even corporates, that it is beneficial for the city, not only from a spread perspective, but also from a price perspective. Any questions about any of the positions in the city's portfolio or any of the purchases that were recently made? And here's just some information on the LAIF balances, and that concludes our presentation. Any other general questions about the economy or anything about the city's portfolio that I didn't address? Perfect. Thank you.
Well, thank you very much.
Thanks so much, Christopher.
Can we have someone make a motion to receive and file the report from Chandler?
I move to approve the report by Chandler.
You get a second? You guys might be on mute.
I'll second it, Commissioner Levine.
Okay. Can everybody state their name and followed by their vote? I'll start. Liz Pagliarini, aye.
Brent Cranmer, aye.
Commissioner Levine, aye.
Ed Rosenblatt, aye.
Rich, you're on mute.
Okay. Rich Steinhardt, aye.
Okay, great. That motion passes unanimously. Okay, thanks again, Christopher. We appreciate it.
Thanks, everyone. Goodbye.
Thank you.
Okay, do any of the commissioners have questions about the consent calendar?
Yes, I have a question for Cheryl. Where does the income and expense for the golf course show up?
It actually doesn't in these. We do in the city's monthly treasurer's report, we do have a line item for, just gonna pull the first one. So that would be tab 5. If you just wanna go to the October one, you can look at any one, but you'll notice that we have a line item for the golf course checking account. So that's the total amount of bank balance for the golf fund. And then of course, total receipts and total disbursements will run through the top of that. It's really page 2 of page 30 of item 5, just in case you're still trying to find the page, but you'll see that gross receipts and disbursements is a total number. And so we have a total there, but as far as detail goes, that does not show up in any sort of detail in this report.
So where does it go then? Is it just part of the general income?
Well, it has its own fund. This is the city treasurer's report is pooled assets from all funds that the city uses to account for all transactions in the city. And so basically what this report is doing is just showing the balances of of the cash and investments that are collectively pooled from all those funds. And of the amount of this portfolio that you're seeing, the total being at the end of this period is a little over 27 million. Of that amount, 251,000 is Gulf Fund assets sitting in the bank account.
But you do keep track of that, so you know whether we're making
We
money or
do
not,
in our
right?
general ledger, but the details of the general ledger aren't part of the monthly treasurer's report.
Yeah, okay. Thank you.
I can address that though. If it's still not in any sort of detail, but if you go to tab 9, there is on the very last page, page 6 on tab 9. This is the city's quarterly financial report through September. It's actually the second to the last, so page 5 and page 6. You do see that Gulf Operations is listed as a fund. Excuse me. So on page 5 of tab 9, second to last line on the chart at the bottom right of page 5, you'll see a Gulf Operations, so you can see what the budget is and the actual year-to-date revenue is through September. And then if you turn the page, you see the same thing for expenditures. So you can see it at a very high level on this report.
Okay. Thanks, Cheryl.
Cheryl, I had a question. I noticed in the Housing Authority report for October, there was something called CDBG Families Forward Acquisition, which looks like a significant amount for that particular report. And so I just don't know what that is. I was just wondering what that is.
So the city receives federal funding through HUD for what is called the CDBG grant. So we have an entitlement that comes to the city on an annual basis, and we could use it for a variety of things, but it must be spent on things that relate to low and moderate income households. But one of the things we can spend it on is transitional housing, low income housing. We actually allocate a portion of it to loans to residents in the city to rehab their homes. And so we have in the past, and then during this time frame here, we have allocated a certain amount to be granted to Families Forward, which is a nonprofit organization, and they've been using some of these funds to purchase transitional housing in the city of Muskegon. So this specifically relates to a purchase of a single home residence for purposes of transitional housing for low and moderate income level individuals in the city of Muskegon. With this particular transaction, Families Forward had funding from some other source, so that funding was combined with this amount to make this last purchase. But we've had it pass. This is our 4th purchase, actually, of this type of transaction.
Okay, thank you. Are there any other questions? Okay, can we get a motion to approve the consent calendar?
Motion to approve the consent calendar.
Second.
Great. Everyone could state their name followed by their vote. I will start. Liz Pellegrini, aye.
Brent Tranmer, aye.
Art Levine, aye.
Rich Steinman, aye.
Edward Rosenblatt, aye.
Okay, great. That motion passes unanimously. Cheryl, do you have any other comments?
Just to maybe provide an update on what's going on right now in terms of the Administrative Services Department. We are starting off our development of our 2-year budget. Those of you that have been on the committee for a few years will probably recall receiving our budget a couple years ago. So we do 2-year budgets during odd number years. So our next budget will be for the 21, 22, and 22, 23 fiscal years. So that's a months-long process that usually concludes in the last meeting in June. The council usually will approve the budget in that last meeting of the fiscal year. We do have various touchstones where we go to the council to provide them information about the development of the budget. So if you're interested in that sort of thing, we did go to council at this last meeting for a pre-budget discussion. If you saw that, then you know what that entailed, but if not, you can go back and watch that meeting or pull the agenda report. But we will be bringing certain staff items to the council that relates to revenue projections in April and proposed CIPs for the budget that I think is also going to be presented in April. And there's a few others in there as well, but if you're interested in following along with that, just know that we're in the middle of that process. And so most meetings from this point forward will have some element of budget related business on the agenda. And so that's really what's going to be taking up most of our time for the next several months. And that's really all I have to report.
Okay, thanks. Do any of the commissioners have any comments?
Vince Steinhoff, I do have a comment. I'd like to thank the staff for their amazing support in the year 2020. I think we have the best staff of any city in Orange County. Thank you, guys.
Thank you.
Absolutely, I second that. Okay, if there are no other comments, we can adjourn the meeting at 5:26 p.m.
All right.
Right.
Thank you, everyone.
Thank
All
you.
right. Thank you. See you later.
Thanks.
Thank you.
See you in 3 months.
Bye.
Bye.